What is a FICO score and how is it calculated? I'm Bradford with the Penny Pincher's Guide. Stick with me and I'm going to help you understand the answers to both questions as well as what you can do to raise your score. So what is a FICO score? FICO itself stands for the Fair Isaac Corporation, and the FICO score first originated back in 1989 when the Fair Isaac Corporation decided to develop a new standard to help lenders analyze your credit report to decide whether or not they would give you a loan. This brings up the question, how is a FICO score different than your credit report? So it's important to understand that a FICO score basically summarizes your credit report in a neat little number to help lenders decide whether or not to give you a loan. Your credit report does not have a number attached to it. Basically, it presents your history of what type of interactions you've had with various loans. Now, this could be credit cards, student loans, home loans, or auto loans. Anything that involves somebody else loaning you money and you paying it back is going to be on your credit report. Now, a credit report doesn't go back forever. Now, in terms of negative credit reporting, so if you fell behind on a payment or you became delinquent, or if you had a foreclosure on your house, even declared bankruptcy, negative credit reports, they only go back as far as 7 years. Now, good credit history will be on your credit report for up to 10 years, after which all those things are just phased out. Now, the reason having a FICO score is good is because previously, before there was a scoring system, every single lender had to develop their own independent way of analyzing and scoring your credit report. So that means you could go to lender A with the same information on your credit report, and they would deny you. Now, if you went to lender B, they would approve your loan. So it was very confusing for the consumer trying to get a loan. Now, with a FICO score, you're able to look at your own score and to decide, hey, I'm likely to qualify for this loan or I'm not. As of today, over 90% of lenders actually use a FICO score to determine whether or not you will qualify for a loan. So it is the basic standard for anyone that is actually loaning money nowadays. The FICO score itself is going to range anywhere from 300 at the lowest up to 850, which is the best FICO score that you can have. Now, there are industry-specific FICO scores which have ranges that exceed the 300 to 850, but that's not what most people are referring to when they talk about just that FICO score in and of itself. Now, this chart I'm pulling up right here is actually really helpful for understanding what the different segments of the actual range of FICO scores mean. So you can see right here that if you find yourself lower than 580, that receives a rating of poor. So most likely you're not going to receive a loan if you're trying to get one. Now, next section, 580 to 669, that falls in the category of fair. So this is below the average score for most US consumers. Now, you might still qualify for a loan if you find yourself in the fair credit score rating, but your interest rates are likely to be much higher because based on your score, you are less than likely to repay the full value of those loans. Now, as you get up with higher scores, 670, 739, that's considered a good score. This is near or slightly above average for most US consumers. 740, 799, very good. It's above average. And then if you have a score greater than 800, that's considered exceptional. And once you're in that range, you're going to be getting the best interest rates and the best terms on the loan that you are seeking. So why does your FICO score actually matter? And before I dive into that, I do want to add the caveat for if any of you actually follow the Dave Ramsey philosophy when it comes to money. So Dave Ramsey is a big proponent of having a 0 or an undeterminate credit score. Now, I just want you to know this is very different from having a poor or a low credit score. Getting an undeterminate credit score basically means that you have had no credit history and you had closed all of your accounts are in good standing. Dave says that once you have all of that previous criteria, it takes 6 to 12 months for your credit score to become indeterminate. Now, upon further research on my end, I found it very difficult to find an exact number to tell you how long it'll take for your credit score to become indeterminate. Be aware, until it does, you will still have an actual credit score and that will impact your life. Now, going the Dave Ramsey method is perfectly fine and you're just as likely to succeed with money. Just be aware of what actually happens with your credit score during that in-between period. Now, jumping back into it, why does a credit score matter? So if you're trying to open up a new credit card, get an auto loan, get a mortgage on your house, having a good credit score is going to get you better rates. Now, aside from the basics of just getting a loan, there are other areas of your life that a FICO score actually has an impact. When you're getting insurance, so let's just say it's auto insurance, you're likely to get a lower premium that you're going to pay every semi-annual or every year if you have a better credit score. Also, if you're trying to apply to be a renter at a rental complex, there's a lot of apartment complexes that will actually require a credit check to determine, hey, does this person pay their loans back on time? that likely means that they're going to also pay their rent on time every single month. The last element I want to bring up, and it doesn't apply in every single instance, but if you're applying for a new job, your new employer may want to run a credit check. See how likely were you to pay your loans back on time? They kind of view that as a character reference as to whether or not you're going to be a good employee. With all that in mind, how is your FICO score actually calculated? So this graphic right here is actually really helpful, and it does a breakdown of the different elements of how your score is actually calculated. So the single largest element, 35%, is going to be your payment history. And this is, do you pay all of your loans back on time? Do you pay your credit card in full every single month? If you do all those things, that helps you out have a higher score. If you fall behind, you miss a payment, you're delinquent, heck, if you had a car repossessed, all of those things will hurt your credit score. Now the next element, 30% of your score is going to be amounts owed. How much do you owe on your mortgage or a car loan? How much do you carry month to month on your credit card? All those things are considered an amounts owed. Next element, 15% of your score is going to be length of credit history. Simple. How long have you had a credit history? If the first interaction you had with loans was opening your credit card 10 years ago, that means your credit history is going to be 10 years old. The longer it is, the better. Next element, 10% of your score is new credit. So any new application for a new credit card or any sort of new loan in the past 2 years counts in the new credit category. The more applications you have, the worse for your score. It just shows up as a red flag to lenders if you're trying to open up a bunch of new loan accounts in a short period of time. So spread them out and it'll impact your score less. The last element, credit mix, the final 10% of your score is going to be, do you have a mortgage, car loan, credit cards? What are the different types of loans that you have? And that'll also impact your score. Now, how do you actually figure out what your FICO score is? Before I get into actually figuring out your FICO score, I want to step back and tell you how you can get your credit report, which is the basis for your FICO score. So the three big credit bureaus, and they're going to be Experian, TransUnion, and Equifax, are all required by federal law to provide your credit report upon request once a year. I put a link in the description below of the only website that is actually endorsed by the federal government where you can get those free scores. Now, because of COVID, they've actually upped their frequency of how often you can request your free score, and it is a weekly basis now through April of 2021. So just keep that in mind. You can request it weekly for free until April. After that, it's going to go back to the once a year. So if you want to check your credit report, you could actually do each different bureau individually to spread it out, so that way you do it every 4 months to get a good idea of what's going on if there's any sort of fraud dealing with your credit. Now, jumping back to actually getting your credit score, there's a lot of free and paid options that you can do to actually get your credit score. You can just find them by typing in on Google. My preferred method is, because there's a lot of credit card companies. If you have a Visa, MasterCard, Amex, basically all of them, depending on who you actually got the credit card through, have free ways of checking your FICO score. Now, I want to dispel a quick myth, is that checking your FICO score through any of these options is not going to hurt your score. Now, the reason it's not going to hurt your score is because you are conducting a soft credit check. There are two types of credit checks that you can do, a soft credit check and a hard credit check. A soft credit check is anytime you check your own score or you're trying to get pre-approved for some sort of loan. Anytime you do any of that, it'll be documented on your credit report, but it's not going to hurt your score. Now, where it does hurt your score is going to be a hard credit check. So this is anytime you're actually opening up a new sort of loan account. If you get a new credit card or you apply for a mortgage, anything like that, the company is actually going to check your credit report and check your score and see if you qualify for the loan. When they do that, it's going to go underneath that category of new accounts, and that will ding your score, but it is only a very minor amount of your total score that is going to be affected. So now into the element that probably most people care about is, what can you do to raise your FICO score? I want to start off with, there's no quick and easy way of fixing your credit score or raising it. You can't just go and pay somebody to raise your score. Now, what you can do is, if there has been a fraudulent charge that's been on your account, or there was a mistake on your credit report, you can apply and request to have that individual instance removed, and that could improve your score depending on the exact circumstances. But what you can actually do, the biggest thing that you can do is make sure that you're paying off your accounts every single month. So if you have a credit card, always pay off the balance in full, and do this every single month. Never fall behind or miss a payment or ever go delinquent. The next thing that you can do is keep your credit utilization rate low. What is your credit utilization rate? So say you have a credit limit of $10,000. You're going to want to keep your credit utilization as low as possible. The less you use, the better you look to lenders. So a way you can actually improve this, is aside from using as little as possible, is every 9 months, so long as you're paying your cards in full and paying any sort of loans you have in full, is request a credit limit increase on your credit cards. Now, if you keep your spending the same, with a higher credit limit, your credit utilization rate will be less. The last two elements of what you can actually do to impact your credit score is going to be open as few new accounts as possible, especially in a short amount of time, and then keep your existing accounts open. So if you have a credit card from 10 years ago, even though it might not have the best rates or any sort of cashback or rewards, just keep it open, throw a couple bucks on it every now and again and pay it off, and just keep that credit history as long as you can. Now, I hope that gives you clarity on the FICO score and how it impacts your life, so that way you can make some better decisions moving forward. I want to thank you as always for joining me today, and until next time, just remember to pinch a little. Thanks for watching, and if you liked this video, make sure to check out the video that's on the left-hand side of your screen.
Don't forget to subscribe if you'd like more great content, and to support our channel.